What is going on, everybody? It is your boy Stas here. Welcome back to yet again another video. So listen up, just like that, another fresh week is upon us, and we have a lot to break down in this video. I'm not sure if you guys knew, but we actually have a couple big companies set to report earnings this week, which you guessed it, that's what we're going to break down in this video, guys. We're going to go over Costco, Nike, Micron, to name a couple other ones as well, and we'll break down the indexes, the futures, what's going on right now. So if y'all find value, smash that like button, make sure to subscribe, and guys, don't forget to get up to 16 stocks from Moomoo, each up to $2,000. I'm telling you, this is the best promo right now by far. Use that link down below, check out all the details. We'll talk more about that later, and with that being said, let's dive into it. So as I'm sure you guys remember, last week was not the best week overall for the stock market. We had SPY, which tracks the S&P 500, get hit from around, let's see, 445 down to 430. That was a $15 drop. We're talking about 3% in 1 week. And Triple Q, which tracks the NASDAQ 100, this got hit as well. It started off the week last week at 371, and we got hit all the way down to 358, down about 3.5%, almost 4% in just 1 week. And I'm sure you guys remember on the 4-hour chart, we had and probably still have a descending triangle on Triple Q. It's actually slowly playing out on SPY, but here on Triple Q, you guys can see we still have lower highs being made, obviously, and we're right by a big support at 355, which if that breaks, guys, we could be going down 345, maybe down to 338, maybe down even more, I don't know, but right now we're hanging on by a thread at that 355 level on Triple Q, and SPY's hanging on by a thread at, let me see here. Actually, yeah, this broke under that point. It was holding on by a thread at 433, but it broke under that on Friday, and it went to 430. So this is actually starting to play out. The descending triangle on SPY is starting to play out, as you guys can see right here, which obviously is not a good sign for the bulls. You guys see the break right here. There could be more downside potentially in the short term. Obviously, nothing's guaranteed. We don't know what's going to happen, obviously, guys. But the way things are looking for SPY, it's a little bit ahead of the downtrend, if you will, than Triple Q, at least as of now. We'll see what this week holds. And honestly, guys, by the looks of it, although this means nothing, but right now the futures are slightly in the green, barely at that. I mean, it really means nothing. But for whatever it's worth, we have the NASDAQ futures, Dow, S&P, Russell, all of those are up a little bit. The VIX, was at about 17 on Friday, so we'll see how that plays out this upcoming week. So keep your eyes on those levels, guys. And with that being said, let me transition over here to the stocks I'm looking at for this week. Number one being Costco, ticker symbol COST, which is one that, of course, has been doing well. The stock always does well, it seems like. It never is in a bear market. I mean, obviously, it's been in bear markets, but it seems like it doesn't last long, right? It doesn't last long, the bear market. So we can see right here on Costco stock, guys, we have a clear ascending triangle on the 4-hour time frame. You guys can see we have resistance at about 570, but at the same time, we have been making higher lows into 570, right? Higher low, higher low, higher low into 570. If that were to break, just looking at the chart, basic chart breakdown here, this could be going even higher. So let me just set my alert quickly at 5, maybe 72 before I do show you these numbers, guys, or tell you the numbers. Let me do that. Mark is that we're above. There we go. So if that were to break, man, Costco could be going maybe to all-time highs. I think the all-time highs are 600, right? 612. Yeah, we could be going there, guys. Who knows? We'll see. With the numbers coming up this week, which I believe earnings are on Wednesday. Let's double check. 26. That's on Tuesday after the bell. So we have Costco expected to do $4.79 in EPS, which last year they did $4.20. So year over year, that will be up for Costco, which is good. And revenue last year was $72.09 billion, and now they're looking to do $77.86 billion of revenue. That would be up 8% year over year. Pretty good, if you ask me, guys. Pretty good. And again, you can see heading into these earnings on Tuesday, we're up a good chunk over the past couple of weeks. We're above the moving averages, and really all we have to do is break 570 to 572, and we could be flying from there even higher. So Costco is one that, of course, from a long-term investing perspective, I would love to get into it, but price is what you pay, value is what you get. Right now, I think the price is just too high, so I'm not looking at it from a long-term perspective here at these levels. But as a trade, man, I'm looking at it as a trade for sure if it breaks that 570, and of course, depending on how earnings look and guidance. So we have Costco this week. We also have Nike, you guessed it, or maybe not. Maybe not. I just told you guys, we have Nike, NKE's the ticker, and my goodness, has this stock been destroyed. I mean, man, this thing was at 130 back in February, March. When was that? March. And now we're at $90 freaking dollars, guys. And that is a 30% drop. And just in the past couple of weeks, we're down from around 105 to now $90, guys. We're down 11% in the past 3 weeks heading into earnings. So this is one that's beaten down so much into earnings. And of course, we don't know for sure what's going to happen. But this is one that don't be surprised if earnings surprise a little bit better than expected. Don't be surprised if Nike sees a sharp rebound. Maybe not that aggressively all the way up to 115. But maybe if it rallies to 9,500, maybe the 180 SMA on the 4-hour chart here, which we've seen rallies there before as it's gotten oversold. That would not be too out of the ordinary, in my opinion. That's if earnings are better than expected. Now, if they drop the ball, earnings are terrible, this could easily fall even more. I mean, look, on the 3-year chart back in the, when was this? The early days of October of 2022, Nike was at $82, guys. I forgot about that. So wait a second. We were at 82 about a year ago, ran to about 130. Now we're pushing right back to 80, 82. This could be going to those lows if these numbers do end up disappointing. That's at least in my opinion. So they're looking to do EPS of 74 cents. And mind you, year over year, these numbers are not looking good. Last year, they did 93 cents EPS. So 74 cents this year. Last year they did 93 cents. And for revenue, guys, they're looking to do, let's see, 13 billion versus 12.69 billion from last year. That would be up a measly 2%, which really is not much. So keep your eyes on just how beaten down Nike is. Maybe a rebound if we get better than expected numbers. So the next one here is Micron, ticker symbol MU, which this has been doing very well. The stock has, not so much the company. Look at this, guys. Year over year, revenue is going to be down roughly 40 to 45%. They did last year, let's see, 6.64 billion they did last year revenue. Now they're looking to do 3.91 billion expected. And for EPS, they're looking to do negative $1.18 versus $1.45 from last year. So obviously, the industry Micron's in is very cyclical. We get that. Obviously, the stock understands that. I mean, if you didn't know what industry they were in and you saw that, you'd be like, oh, their stock has to be down 50%, right? And then you look at the chart, you're like, wait a second, they're down 40% revenue year over year, but their stock's up like 40% in the past couple of weeks. Or not past couple of weeks, that's exaggerating. Or I'm exaggerating it. But you know what I mean, right? People would be like, what the heck? But then you realize, oh, they're in a cyclical industry. This isn't out of the usual. So at this point, look, we have an ascending triangle here on Micron. Let me show you what I'm looking at. We have clear resistance at about 72 to 75. That's pretty obvious. But at the same time, we have higher lows being made, right? 52, we held 60, 63. Now we're at 68, 70 bucks. Now we're getting closer and closer to that 72 to 75 resistance, which if that breaks, guys, man, Micron could be going higher, potentially with the earnings coming up. I don't know, guys. The thing is, of course, it's risky. Things could be priced in. You know, earnings might be bad. That's not priced in. The stock could drop. There's a lot that goes on, which is why I'm not a big fan of trading or not trading around earnings, buying and holding and gambling through earnings with call options or put options. I'm not a big fan of that or with shares. So I'm going to wait and see what the numbers look like. I'll set my alert and we'll just wait and see. They're set to report on Wednesday, the 27th, so keep your eyes on them. And actually, guys, before we dive into the next stock here, do not forget to get your free stocks from Moomoo, up to 16 stocks, each up to $2,000. I'm telling you guys, this is by far the best promo right now. All you have to do is use that link down below, or just simply go to stocksurfest.com/Moomoo. Once you fund your account with your initial $100 deposit, you get 5 stocks right off the bat. And once you fund your account at least $1,000, if you guys want more stocks, you get 10 more stocks, totaling 15 stocks, each up to $2,000. And if you fund your account at least $5,000 on top of those 15 stocks, this is where the promo gets nuts, guys. You get another free share of either Google stock or Tesla stock. So get on it. What are you waiting for? Again, this is the best promo right now by far. So get up to 16 stocks from Moomoo, each up to $2,000. Use that link down below or just go to stocksurfest.com/Moomoo. And with that being said, guys, let's break down the last two stocks, which aren't as exciting, I'm not going to lie, as the other ones that we've mentioned, but they're still worth looking at. CCL, which is Carnival Cruise Line, has been declining for a couple of months here, which honestly is not surprising at all. I mean, look at this stock, guys. Geez, it was at $8 back in March. It ran all the way to 20 post earnings from the previous earnings report. And since the last earnings report, it's just been cooling off. I mean, yes, it's sold off. It's dropped a lot. But overall, in the grand scheme of things, we're still up massively from where we were a couple of months ago or earlier in this year. Yes, we're down 30% in the past 3 months, but in the past 6 months or 8 months, whatever it is, we're up, or 6 months, we're up 75%. So CCL is set to report earnings this week, of course. They're on, I think, Wednesday. Let's double check that. No, Friday. They're on Friday morning, and they're looking to do EPS of 75 cents on, let's see, revenue of $6.69 billion. Looks like last year they did $4.9 billion of revenue, so that's going to be up 36% year over year, and EPS last year was a loss of 58 cents, so that's going to be pretty good for EPS year over year. So CCL is crushing it, and again, the stock is beaten down, but overall, it's still a holding trend, guys. We're approaching a spot where honestly, I think buyers will come in depending on the earnings for that we're going to get this upcoming week. I think 12 to 14 bucks could be a buy zone on CCL. We'll see if it breaks through that point, though. Maybe we start going single digits again. I don't know. But time will tell. The next one, the last one for the video, guys, is CarMax, ticker symbol KMX, which they're set to do EPS of 77 cents versus 79 cents last year, and revenue's looking to come in at $7.01 billion versus $8.54 billion from last year. So they're not looking too good. I'm not going to lie. They're not looking too good for revenue year over year, down 18%, and EPS is pretty much the same for CarMax projected, and right now they're actually at a big level of support here, guys, at 76 bucks, which, I mean, geez, that's a big spot here. So if we do break under that point, maybe we start filling the gap down. 73 potentially, we could be going to 67, right? So keep your eyes on these points on CarMax. I'm not the biggest fan of this chart. Maybe if it gets beaten down to the higher 60s rather, lower 70s, maybe I'd consider it as an oversold play. But as of now, I'm just watching it because of earnings this upcoming week, and we'll see how it ends up playing out, guys. So what do you think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe here on YouTube, guys. It is free, and I think 60% of you are not subscribed. So if that's you, hit that subscribe button. You might as well follow me on Twitter as well, at Stas Talk Stocks. That's linked down below. And with that being said, I'll catch you guys later.